Okay, good morning, everyone. We're going to get right into the stock market technical analysis. Just going to go through what I'm seeing, in the charts this morning, and I want to get the video out there relatively quickly. So let's just jump right into it. All right, triple Qs. We gapped down today, obviously, on the inflation report. Here's the hourly chart. We gapped down pretty much right to this. There's a level of support about 294-ish. But we gapped down and we've pretty much taken that out. I don't see anything in the charts as of right now that is bullish. I have stopped out. Now, I took the trade right here on this close yesterday at this gap fill from this 299 level. But with the gap down, we just have to stop out and take the loss. Again, not a huge position. It's not. I wasn't like fully loaded long because, again, as we were running up in here, I was taking some profits. So I lightened up on some of my long trades, but some of them I still had and had to, we just have to take the loss on some of these. That's the name of the game. You're not going to get every trade right. And I talked about exactly how I'm looking to trade it yesterday. Today with this gap down and this big impulsive hourly close, I don't see anything in the charts telling me to stay long. So for the most part, I am not long at least any of the tech stocks that I've pointed out. All right, none of those are no longer longs. They're all in fact, I flipped short on Roku. Let me go through that one. Here's Roku. So this one had a false breakout. So on Roku, we had a bullish falling wedge pattern right there, and we broke to the upside. You'll see right there. There's a breakout. And it had bullish divergence. It had everything we needed for a bullish setup. But as I zoom in, you can see, okay, yesterday selling down, today gapping down back within this wedge. So I basically false breakout, all right? And that's very bearish. So I've actually flipped short on this one, looking most likely for a move down to the bottom of the wedge, all right, down here about 71.60. As I roll through some of these other short trades, they were long setups, but not really actionable. PayPal, you can see here, I got to grab the right tool. As I zoom in, they made it look like it was going to break out right there, but it never did, and gap down back within this wedge. So no breakout, still moving lower. Zillow Group, I talked about this one. Same setup, kind of a potential breakout. But again, when I talk about breakouts, I always look for impulsive price action, and this just wasn't that impulsive. They gapped it up but sold it back down below. Really not that impulsive of a breakout. Selling down today, obviously. So no dice there. And just in general, I'm just not seeing any bullish setups, really. Even BABA, go to that one. BABA here, BABA's probably one of the more bullish setups. You can see we are kind of at support right here. I got a lot of trend lines going on, so I got to clean that up. But, so yeah, we're still holding support, which is about 108.80. It's objective to go long here. I don't know. We might come down and fill this gap. Again, we're also seeing a lot of these things fail, so I'm going to probably just hold off on anything on this one personally, but again, it is objective. Again, there's support. You can see it right there. All right, and we're right there now. So here's the S&P 500, the SPY, breaking down today, approaching the lows. Nothing bullish in this chart right now. I just don't see anything telling me that we're not finished selling off. Again, I talked about how I think we're in a bear market rally. So the rally and the long trade ideas I've been talking about for the last couple of weeks were just that, an attempt to catch some of that bear market rally. I did successfully catch some of it, gave a little bit back today, but we did definitely profit on that rally. And now I'm looking to, I'm looking for a resumption now of the bear market. So I didn't know when the bear market rally was going to end. Obviously, a lot of the time they'll catch you off guard, and the selling will show up. And sure enough, that we are getting that selling today. So I guess we're just heading into, continuation of the bear market. All right. And that's been my general theme the entire time. We are in a bear market. I think we will continue lower, but there will be rallies along the way. We'll attempt to try to get get the rallies as we see them. But generally, look, bigger picture, bear market. So we want to sell the rips. I reshorted this one today as well, PANW. I like this for a continuation to the downside. Here's what I like about it. On the daily chart, you've got here's your bull trend. This is going back to March 2020 on the daily. So you can see support, support. It's just walking up the 200, held support all through here. Okay, lots of reactions along that trend line. We had the sell signal. The initial sell signal came back here on May 5th. I talked about this as a trade idea back then. We traded this down. As this came on down, we've now seen this bear market rally, but again, I think we've started this bear market. All right, this is the bull trend, and this is the beginning of the bear trend here. So we should continue lower. So the bull trend, the recent rally that we've seen, we rallied into the 200-day, tested it for about 2 weeks, starting to fail and gap down. So I'm looking at lower prices on this in the near future. So I think we're probably done with the rally here, and we're going to head lower. We should take out the lows here, 420.88. That's kind of the next level. For me, that's the next key level of support. I would expect that we take that out and move down to our next target. And there's a big, huge gap down here. See this big gap? 374. All right, we'll call it 375 just to be clean. All right, that's the target right now on this move. So I am short this one, looking for a continuation to the downside. It's going to take a little while to get down there. It's not going to happen in one day. It's probably going to take a couple months. But, you know, we're still looking at a drop of about 25% in this one to hit that target. All right, so there's a trade idea. Again, I am short this one. And Tesla. So again, I've talked about Tesla. My target on Tesla being 550 right here. We got close, but we had that rally. I think that rally's probably done. We're sitting on some support right now, about 701. It's just slightly below. I'm pretty sure we're going to give way. This is going to give way. I don't know if it'll happen today, and we should head down to that 550 target. So I am reshort Tesla as well. Short Tesla, looking for a move over the next couple days to weeks down to that 550. And that's our next target. That's been a target of mine for quite a while, and just looks like we're heading down there. So I am short this one again. Okay, let's flip over to gold. So again, gold, I remain bullish on gold. I remain bullish on the gold miners. You can see they're all, you know, kind of acting as a hedge for me, at least today, because I got caught on some of that gap down with my Q short. But the miners and all my gold positions are rallying pretty strongly. So, you know, acting as a hedge today, and that's good. It's important to diversify your positions. You don't want to just have a single one position, one trade. You want to have, you know, multiple trades as long as the technicals work. And so these continue to look good. I want to show you guys this one here, HMY. Now the day's not done, so I definitely don't want to jump the gun, but I do want to point out the potential here. This is on HMY. This is just a gold mining stock. Technically, it looks okay. You can see here back in 2015, this is where we start our bull trend. Here's COVID, and then zooming in, you can see we held it again there. And today, they gapped it down, but they're recovering it right there. So that level is still good support. Also, we have the potential as I zoom in on this daily candle. Now, again, I point out the day's not closed, but the potential for a bullish engulfing candle. All right, this candle's engulfing the previous day at least. And so that's a bullish engulfing. We need to wait for the day to close to confirm that. But if it's a bullish engulfing, it might be it might signal that this is the end of that sell-off, and we're gonna continue to rally here. What you want to look for, though, is confirmation. You want to look for more buying tomorrow. A confirming candle is ideal when you have a reversal candle like a bullish engulfing. Again, if you're interested in learning all this as a skill set, I break all these concepts out in my course. So take the course, link in the description below. Check that out if you're interested. I have a lot of students who have found a lot of value from that, so check that out. All right, so there's potential bullish engulfing, and I'm just kind of scanning through some of these. I mean, AG bouncing off this support, this trend line I have, WPM recovering this support line that they violated on the gap down, but they've stepped in and bought it. PAS kind of right there at that trend line. MTA, so again, the trend line I've been watching is right there, all right? That's the one that's been really key and pivotal for me on this one. And you can see for the last, I don't know, month, we've just been trading on it, consolidating. Had a rally, came back in. We're not violating it, and so nothing's technically wrong with the picture here. I still like this as a bullish setup. And I also like the fact that we broke the trend line right here on this price action. That's bearish, but then when you recover, that's a bear trap. So to me, that tells me, okay, this is a bullish chart. And that trend line's important because that is strong support. All right, you can see this is the big strong support of this one. We're just basically trading right along key support with the bear trap in place. I think we're heading up to the top of the channel. Probably going to break it as well, but again, and all I can really say for now is it looks likely we're heading up to the top of the channel, and then we'll have to see the breakout if we're going to get it. Okay, oil. Starting to see oil soften up a little bit. Nothing crazy yet, but we're definitely keeping an eye on this. Here's DVN. Want to point out these oil stocks are one of my key short setups that I'm really focused on. All right, DVN for me. I talked about how I want to see this this wedge break. So I'm looking for a breakdown here. We're definitely breaking off the resistance up here today with the gap down and selling down. Still need to see this go though. So no sell signal yet, but down 6%. So we'll continue to watch this one. EOG, this is another one that I point out. It's kind of similar. We're trading up along resistance. We should break off this, and I think we'll probably head down to the bottom of the channel. But no sell signal really yet. You could short it at resistance right there. I mean, we're basically right there. So it's objective to short here. We have negative divergence. You'll see here on the momentum indicators. Boom, negative divergence. That's really been building for quite a while. And then, you know, it's right there as well. So negative divergence at major resistance. Oil's starting to soften up a little. And I think it's worth a shot, at least in my opinion. It's objective. The risk reward's pretty solid because the thing is if you're wrong, let's say it continues to rally. Yeah, you know, you don't want to give it too much room, but you might want to give it a couple percent over the high here. Maybe so you stop out at what, 151, 152, something like that. And that's your risk, and then from where we're at right now, your reward minimum to the bottom of the channel, 14%, maybe a 12%, depending on when you get there. So your risk is, very, very favorable right here. Maybe you've got from where it's at now, you'd maybe have to risk about 5% and then the potential to gain about 14 to 12. So it's at a minimum a little bit better than a 2-to-1 or potentially a 3-to-1 risk reward ratio. Again, that's a key concept that I talk about in my course, but risk reward ratio is good for that one. So I'm not harping on it. It's just an idea. I'm just seeing these gold stocks starting to soften up. These oil stocks starting to soften up. And that brings me to some of these commodities. We want to watch that. Here's DBA. This is the inflation trade. So this is, for me, this is one of the key things I'm watching for the inflation trade, still being intact. And it is still intact. These are ag commodities, a basket of them. And you can see still on support, still holding. So nothing wrong in the inflation trade. Inflation's not peaking or topping. I don't know where people get that. They're just pulling it out of there, they're just making it up, basically. They're hoping inflation's peaking because they know that they need inflation to peak, because if it doesn't and the Fed continues to talk hawkish, then it's going to have to continue to hike and the market's going to really, continue to sell off, and it's going to be a lot of damage. The Fed needs inflation to peak. They don't want to hike rates, and they really can't hike rates too much more. So just to go into that a little bit, likely what's going to happen is, the Fed is continuing to try to walk the market down. They're trying to get this inflation trade to break a little bit, and then and that will give them breathing room on hiking rates. The Fed can't hike rates too much, so they need to do whatever they can to get the inflation trade to break a little bit, without hiking rates too much, whether that's scare the market more. And that's basically what the market's trading on. They're trading on the rhetoric. They're trading on the fact that the Fed is talking hawkish. They're not going to be that hawkish, I think, in all reality, but the market will just trade down on the fact that that the Fed's talking hawkish. So that's what's going on now. I want to look at the VIX real quick. Keep in mind, we didn't really see the VIX spike in the last sell-off. And that was something that I was really focused on. That told me that we're likely not at the bottom. So maybe we're going to get the VIX spike this time on this next leg lower. I'm starting to buy some VIX long positions for that spike. I want to see the VIX pop to help me signal, at least a near-term bottom. Right now, resistance on the VIX is about 38.43. I think if we break above that, that's going to be that spike that will likely signal at least a near-term bottom as everyone rushes for put protection. So again, I'm starting to go long the VIX. I think we're probably trading up to this resistance level at 38. And then, maybe consolidate there for a day or two, and then we could see that spike. Here's Netflix. Haven't covered that one. Still the potential, I think. It's not super clean, but still the potential for that head and shoulders. So that would be a shoulder here. There is the head, and then potential shoulder. You can see we're trading right in this area. So if they can hold this, I think it's close enough to say that that could be a shoulder. For me, given the market and where it's at, it's just looking pretty bearish. What I would probably prefer to do on this one is, rather than take a shot right here for a long trade, probably wait for a break of the neckline. The neckline's up here about 204. You can see that was good resistance there. It was resistance here and resistance there. So if that can break, if you can break to the upside of that, then that should send us up to a gap entry and potentially a gap fill. But there's a lot of potential upside in this. I just don't want to pull the trigger on it yet with the market trading how it is. So I'm going to hold off and, probably wait for a move all the way up here on a break of the neckline. It's just, it is 10% up. So it is definitely, you have to kind of ride it out and maybe give up some potential gains if you want to take the long. But with the gap down like this and the market trading like it is, I'm more interested in looking at shorts. Unless we get some sort of reversal today, going back to the Qs, unless we get some sort of reversal today or, into the close and they rally this thing up back above this 294 area. If they can do that, that would be pretty bullish, and this would signal a potential bear trap. But as of right now, I just don't see it. So I'm starting to, I'm basically tilting bearish again. And I've kind of laid out the key levels that I'm looking at. But on triple Qs, if I go to the daily, and we'll wrap up here, we still haven't hit our pre-COVID highs, all right? Our pre-COVID highs on triple Qs is right there, 238, all right? I've got it kind of marked out. And we hit that on IWM and a few others, but we haven't hit it on the triple Qs, which means I still think we've got more downside. Again, this is the target that I think that the Fed will likely maybe try to step in at, but I think we're heading down here, all right? So not interested in long trades anymore at this point. I think we've caught, most of the rally that we could get on the trades. I took, again, in a bear market, when you're in a bear market rally and you get pops like we did in like Roku where it was up 10%, you're going to want to take profit on those kind of moves higher. All right, so whether you lock in all your position and all the profit, that's kind of up to you. But I always lock in profit on when I've got trades, especially in a bear market rally, and the trades are working in my favor, I lock in profit. So that's all I got for this morning. I'll keep an eye on things and probably put out an end of the day video just because we've got a lot of, especially if something changes. Otherwise, live stream tomorrow morning. Bring any stock picks you guys want me to look at as we continue into this bear market.